Yeah, the weekend turned out to be intense, to put it mildly, and we clearly have something to discuss.
Do the Harlem Shake.
What am I doing? Bitcoin, a wild rollercoaster ride, leaves leverage traders with $415 million in liquidations. Yeah, Trump is playing with the market harder than Musk with Dogecoin. And not only did Bitcoin fall from $71,000 to $67,500 over the weekend amid ultimatums with Iran, but today the buffoonery continued. On Monday, the price first jumped from $67,500 to $71,200 when Trump wrote on True Social that he postponed strikes on Iranian power plants 5 days because he stated that we had a very productive conversation. Don't mind me. The price immediately shot up to $71,500, and then Iran announced that there had been no negotiations. So market reaction, Bitcoin immediately rolled back to 70,000. To put it mildly, this is messed up. In 4 hours, $415 million worth of liquidations took place, and of these, $280,000 million are shorts, which Trump destroyed, and $135 million are longs, which the Iranians have already finished off. And this is the case when the market fucks us both in the tail and the mane. And I don't know, there is no other words to say it. But the Bitcoin is not the only one. Everything is storming right now. Oil futures on Hyperliquid also liquidated $64 million. At this very moment, the price is still moving up and Bitcoin has already reached $71,200. If you have any money left after all this, you can of course play a guessing game where the price will fly next and catch a big wave, but I will probably look from the side for now and just won't trade today. Resolv Labs suffers $25 million exploit, USR depicts. So the Resolv protocol seems to be done and over with. The hacker hacked the platform, released 50 million of the unsecured USR, and withdrew about $25 million. As a result, the native stablecoin collapsed from $1 to 20 cents. D2 researchers found out that the attacker deposited only 100,000 USDC through the request swap function, and he received 49.95 million USR at the exit, and this is 500 times more than the deposit. So either the oracle was deceived, or the validator was compromised, or they simply forgot to insert a sum check between the request and finalization. Next is the classic DeFi robbery. The criminal converted USR to VST USR and began selling on all available platforms, draining liquidity and finishing off the price. And there was a huge slippage in transactions, but the hacker didn't care. He was withdrawing funds through swaps and bridges. And the Resolv team has stopped the protocol and promised to figure it out, but the main question remains: how did a request for 100,000 USDC turned into 50 million USR? Mind you, Resolv was positioned as a platform for high-yield stablecoins through Delta Neuro strategies based on Ethereum and Bitcoin. But apparently, the failure strategy turned out to be the most profitable here. And once again, we see that stability in the crypt is a relative concept. And seeing such charts in stablecoins, UST and Terra immediately come to mind. If you like staying up to date with all the latest cryptocurrency news, don't forget to like up this video and subscribe to the channel, and this way you won't miss the next news yourself and will help my channel grow. Crypto Bull Run Outlook 2026, key signals from the 2025 cycle. While Ethereum is hanging around $2,075 and losing 3.5% per day, analysts have found an indicator that promises growth by the summer. And the realized profit ratio of whales, it's those with more than 100,000 Ethereum, has exceeded 0 for the first time in a long while. The CW analyst explains when large holders exit the loss zone and start taking profits, this often marks the beginning of an upward movement. And historically, after such a signal, Ethereum has grown by 25% in 3 months, by 50% in 6 months, and by 300% in a year. If the pattern works, Ethereum could rise to $2,750 by June and above $3,200 by September. But you have to understand that the indicators are not perfect. Even the same indicator gave a false signal in 2018, and after the metric reversal, Ethereum fell by another 70%. But to be fair, additional factors are now also hinting at a rebound. The Sky user noticed that current price of $2,000 is the level with the largest trading volume, and there should be a rebound from it. Analyst James pointed out that Ethereum dominance has broken through local resistance and is aiming for 11%, while the asset itself holds key support. In general, while Citigroup is lowering its annual forecast from $4,304 to $3,175, old indicators and whales hint that Ethereum may stage a spring rally. Let's hope that the history of 2018 does not repeat itself now. Bitcoin mining difficulty tumbles nearly 8% as AI demand pulls miners away. Bitcoin miners are experiencing another upheaval. The complexity of the network collapsed by 7.76% to 133.79 T, and this is the second deepest drawdown since the beginning of the year. The hash rate has been steadily declining since October 2025, falling from a record 1.15 zettahash per second to 940 exahashes per second. The reduction in complexity has slightly raised the hash price above $33 per petahash per second per day, and this is still far from the average break-even level, which is $40. Of the 14 largest public miners in the United States, only Iran and American Bitcoin Corp are currently in the black, and the rest are either at zero or in the red. Miners are being saved by diversifying into AI and cloud services. Bitfufu, for example, reported an annual loss of $57.4 million against a profit of $54 million last year, but revenue rose to $475.8 million, and 73.7% of it came from cloud mining services. The customer base has reached 675,765 users with 26.1 exahashes per second under management, and the company holds 1,778 bitcoins. So the CEO probably betting that when the Bitcoin grows, these stocks will become a gold mine. And in the meantime, miners continue to struggle for survival, and the difficulty is falling, which, by the way, is also historically often the case before a market reversal. Analysis warned of war amongst these stablecoin networks. Delphi digital experts stated that the largest issuers and fintech giants have stopped relying on universal blockchain, and they have begun to build their own L1 networks focused exclusively on payments. Circle launched Arc, Tether Plasma, Strike and Paradigm Tempo. And this is not including specialized solutions like Codex, multi-currency payments for banks, One Money, retail payments with built-in AML, and Pay, private transactions for institutions. So why not take ready-made Ethereum or Solana? Well, the answer is simple here because they are not developed taking into account institutional flows. Universal networks are designed for solubility and compatibility, while payment giants need efficiency, control, and compliance. At the same time, stablecoins are mastering a new role, not just payment rails, but treasury instruments. A Ripley survey of 1,000 financial leaders showed that 74% see stables as a means of just managing cash flows, while 72% consider digital assets to be the premise for competitiveness. And fintech companies are particularly active. 31% already accept stablecoins from customers, and 29% just directly. At the same time, 89% of respondents are looking for partners for tokenization, and the main requirements are ISO SOC 2 certification, which is 97%, operational support 88%, and experience 80%. In general, stablecoins are no longer just crypto dollars, and basically they are turning into full-fledged industry with its own infrastructure, standards, and a war for corporate clients. And universal blockchains may have to make some room now. The biggest heist of the US-China chip war. 3 Supermicro employees charged with conspiracy to smuggle restricted NVIDIA chips in a $2.5 billion scheme. Goodness. So US authorities have detained Supermicro computer co-founder Yixin Wolin Liao and charged him with smuggling $2.5 billion worth of banned AI chips into China. And the scheme was beautiful. So GPU servers were assembled in the US, shipped to Taiwan, and then to Southeast Asian countries where they were repackaged in unmarked boxes and transported to China. To deceive the auditors, thousands of fake servers were manufactured, and the cameras show how one of the defendants personally removed stickers with serial numbers using a hairdryer. For such good service, they can be given up to 20 years in prison. Apple urges iPhone users to update as Karuna and Dark Sword exploit kits emerge. So Google has identified a chain of exploits called Dark Sword, which allows you to hack into an iPhone and steal seed phrases from crypto wallets. And the exploit combines several vulnerabilities, including 0-day, and it is activated by simply visiting a malicious website. After entering, the ghostable module is fixed in the system. It establishes communication with the attacker's server and collects confidential information like messages, application data, geolocation, and of course, seed phrases. All this is done without the user's knowledge, of course, and attacks have already been recorded in Ukraine, Turkey, and the Middle East. Certic experts warn this is not just another virus but a trend. Sophisticated hacking tools previously available only to government agencies are now being spread among a wider range of players. And in order not to become a victim, you urgently need to update your iOS to a version 26.3 and turn on a lock mode if it's unavailable. And basically, most importantly, never store a seed phrase on your phone. And last week I said that we would post our documentary with the full story of Bitcoin over this weekend, but unfortunately it's a little delayed in editing because I want to give you maximum quality. So I hope for your understanding. The film will be released in the next couple of days and I have already watched it and it's pretty cool, I like it. But that's all the news for today and I will see you tomorrow. Bye!